Hey guys, welcome back to my channel. It's nasdaqwitharshia. Today, I plan on starting a series on ETFs, which will be included in a playlist very soon. But before we begin, I want to say that I'm not a financial advisor, and you should always do your own due diligence and research before taking part in any investment scheme. So this video is going to be a lot more simpler than other videos. We're going to start off with what is an ETF. So an ETF basically stands for an exchange traded fund, and in simple terms or layman's terms, it's basically a big basket of stocks, basically compiled into one little package. So imagine a big basket full of all your chips, candies, and everything that you like, and you just get the whole basket. That's basically an ETF. But we'll also look at the dictionary definition. So I'm just gonna share the screen with you guys. And the reason why I say this is to just break the silence. But what is an ETF basically? So what is an ETF? It's a type of security that tracks an index, sector, commodity, or other asset, but which can be purchased or sold on a stock exchange the same as a regular stock. So basically, it's similar to a stock, but it just compiled all of those assets. So since an ETF has like so many assets, it can be a great option if you're looking to diversify your portfolio, and it's quite popular for that reason. But there are many advantages and disadvantages of using ETFs. So again, we will share our screen. So this article is from Investopedia. You guys can easily view this. I will leave this in the description box below, but we're going to move on to the Motley Fool article. If we scroll down, advantages ETFs. ETFs provide exposure to a variety of stocks, bonds, and other assets, typically at a minimal expense. So it's basically a discount price. And they take the guesswork out of stock investing. So they just have to match the performance of the market instead of you looking at a balance sheet of each and every stock, which can be very painstaking. You can just look at this one balance sheet, and you don't even have to look at the balance sheet too much because the market's performance over time has been historically strong. ETFs are more liquid. By liquid, I mean easier to buy and easier to sell than mutual funds. Online brokers make it easy to buy or sell ETFs with a simple click of the mouse. So online brokers, what they mean by is TD Ameritrade, Robinhood, and all those other good stuff like Webull. It can be extremely complicated to invest in individual bonds, but a bond ETF just compiles everything and makes the fixed income portion of your portfolio like a breeze. So the drawbacks of ETFs, only two, which I think is really good. So they don't have quite as much as return potential as buying individual stocks because it's just, again, it's a basket. The main thing about it is it's a basket of stocks. They're often low cost, but they aren't free. Let's keep in mind. And what I mean by they aren't free is if you buy a portfolio of individual stocks, you don't have any management fees at all. You don't have to pay any management fees, but in ETFs, you actually do have to pay a little bit of a management fee. And also, if we look at this article here, scroll down, because there are multiple assets within ETF, again, they can be a popular choice for diversification. And I'm emphasizing on that and repeating it because it is a really, really good choice. So ETFs trade through online brokers and traditional broker dealers. You can view some of the top brokers in the industry for ETF with their website list of the best brokers for ETF, which I will leave that in the description box below. But essentially, there are like 3 steps to investing in ETFs. Number 1, open a brokerage account. Like use TD Ameritrade, Webull, all the stuff, whatever you use, whatever you like to use, whatever you feel comfortable with. Second, pick your first ETFs. So an ETF that I like in particular is Vanguard Standard & Poor 500 ETF. It's really good for big companies, and I personally like it. And third and final step, this is the fun part. This is really fun. Let your ETFs do the work for you, and life is amazing. Life becomes amazing. So anyway, as we scroll down further, there are many other ETFs like Vanguard Standard & Poor, which is one I like. This is Schwab US Mid Cap ETF. Vanguard Russell 2000 ETF, which is also good. Schwab International Equity ETF, the Schwab Emerging Markets Equity ETF, the Vanguard High Dividend ETF, which I like this one too. This is stocks that pay average above dividends, which is always fun. Schwab US Rate ETF, Real Estate Investment Trusts. That's also good. Schwab US Aggregate Bond ETF, so bonds of all different varieties and maturity lengths, which I don't really like bonds that much. I'm more of a stocks person, but that's up to you. Vanguard Total World Bond Fund and Invesco QQQ Trust. This one I have never heard of. It tracks the NASDAQ 100 index, which is heavy on tech and other growth stocks. So sounds good. So this is just 10 of the best ETFs for beginners according to the Motley Fool, which I will also leave in the description box below. And that's all for today. Thank you guys for watching this video. I hope you enjoyed this video. If you found this information helpful, please be sure to like, comment, and subscribe. See you in the next video.